Hello friends, thanks for watching this video. I get a lot of questions from a lot of traders on my email list where they ask why they are struggling in forex market, why don't they make the money that they felt they should be making, why a particular forex strategy, for example, is not working for them. So I thought, why not to make a video which basically tells them how to evaluate a forex strategy, how to evaluate if the forex strategy or forex system they are using is basically having all these components which are uh, needed to make it a successful one. So I'm just making it a very short video in which I'll just tell you some very important components that every successful strategy should have. So let's get started. I'll try to keep this video short to only 5 to 7 minutes. So again, the first question is, what is a successful forex strategy made of? Um, I mean, a strategy is not just about having an entry point and having an exit point. There's much more to it, and we'll just cover through some of the important points that you should have. A successful system forex system should be made of easily identifiable entry and exit points. I mean, let's look at this chart. The easily identifiable entry and exit point basically refers to the conditions which will unambiguously tell you, like, okay, a person should be entering the trade here and exit a trade here. I mean, there should be a reason behind everything. If the system tells you to, for example, enter this point, there has to be a reason behind it. Why to enter here? Why not to enter here? Or for that matter, why not to enter here? Or for that matter, why not to enter here? It should have clear guidelines on when to enter, and the same thing, when to exit. Should you enter the trade here? Should you exit the trade here? Should you exit here? Should you exit here? Or should you exit here? There has to be a reason. So this is one basic component which should be there. Clearly defined time frame when it can be used. Should you use during the US market? Should you use the strategy during the London market? Should you be using during the first from the 8 a.m. EST to 10 a.m. EST, because that's when the most liquidity is there? Or should you be using at the back end of the day when the brokers are closing down or the banks are closing down? So a clear defined timeline should always be present, when to use the strategy, when not to use the strategy. Like I mentioned earlier, and times when it should not be used. Should you be using it during the, for example, a fundamental announcement comes out, like a non-farm payroll comes out? Or should you be using it when the liquidity is low, or when the Asian session is going on? So this is the first minimum component which should be there, which is a clearly defined entry and exit point, and the time frame when it should be used or should not be used. And that thing, I think, is contained at least in 50 to 60% of the systems. You won't get this kind of clarity when you're using the expert advisors, because expert advisors, they basically try to take the control over from you. They say that we'll decide when to enter the market, when to exit the market, and most of the forex robots which are out there, they basically don't adapt themselves to the changing market conditions, or they basically don't have the inbuilt strategy which will decide when to trade, when not to trade. And that is why most of the forex CAs or forex robots, they don't work, because they don't adapt to the changing market conditions, and their entry and exit criteria is not very strong. But the biggest thing you will find missing from most of the forex systems out there, and the biggest thing which is missing from almost all the forex robot, is about the trade management. I mean, it becomes very easy to say that, okay, you enter here, you exit here when you look at the chart. But what is the journey you are taking from here to here? If you open a trade, for example, here, where are you going to place the stop loss? Does it say that? How are you going to adjust your trade if, for example, it starts going this direction? Should you wait for 25-minute pips to come back, or should you wait for 40 pips to come back? If, for example, you are in a winning position, should you open another trade on the same currency pair? Or, for example, if you're running a trade on the Euro USD currency pair, should you open another trade on the USD Swiss franc? Because both currency pairs behave very similar to each other. they have the correlation, but it's an inverse correlation. By that, what I mean is if the graph in the EE Euro USD is going up, the graph in the USD CHF will be going down identically. And so if this currency pair is going up, that currency pair will be coming down. That is for sure. So should you be opening a trade if the Euro USD is working? Should you be opening the USD CHF? What are the different money management guidelines? None of the I have seen very few forex currency trading systems which basically address this important question. The precise stop loss. If you're, for example, doing a trade on the, for most of the systems I have seen, if it doesn't matter whether you're trading on the 15-minute chart or 1 hour chart, they will say, if they give some guidelines on the stop loss, they will simply say that, okay, put the stop loss 30 pips away from the entry point, which is not going to be sufficient if you're trading on a 1 hour chart. On a 1 hour chart, you need a minimum of 50-55 pips of stop loss cushion. On a day trading, you may need at least 20-25 pips. So there is a precise stop loss requirement when you're using a forex system. If the system you are using currently doesn't address this question, I am highly doubtful if that is going to work. What are the trade management guidelines? Like, for example, I mentioned how to adjust your stop loss. For example, if you have 40 pips in profit, should you use your stop loss 30 pips away from your entry point, or should you bring it to the entry point so that if the market reverses from that point, you're not in a losing position? If the stop loss will be hit, you will end up in a 0 pips profit or 0 pips loss. That's what I would put in. So how should you adjust your stop loss? If you're, for example, 100 pips in profit, should you leave your stop loss at the same point where it was when you open the trade, or should you adjust it so that if the market is reversing, at least and if it reverses to a point where it hits your stop loss, at least you end up in some pips of profit? Sure. Does it mention some kind of guidelines like that? And the third important thing, which 97 to 98% of the systems don't mention, is the limitations of the strategy. There is no strategy which will work in all the market conditions. There will be limitations, not only just the market conditions, but also to the currency pair. A system which is working well on the Euro USD or the GBP USD currency pair, it may not work on, for example, USD Canadian or USD Japanese yen currency pair. So which currency pair does it work best with? Your system should explicitly mention either that it works with all the currency pair, or these are the currency pairs it works with. If it doesn't addresses this question, there's a good enough chance that the currency pair you are trading with, it may not work with that. When to use it, when not to use it, like I mentioned above. If you use a system which is working well on the fundamental announcement, may not work well with the technical news or the technical settings. If the system works well with the technical settings, it may not work well in the non-farm payrolls. We all know that the Asian session is the one where the market liquidity is very low. If the system is for trading on that time frame, it may not work well in the New York when the New York session is going on. Or if the trading system is working well in the New York session or the London session, it may not work well in the Asian session because the liquidity is. So these are the three important things which you should always look at when you're using a forex system. First, what are the entry and exit criteria? The direction should be absolutely clear. That okay, this is the point where you should open a trade, or this is the point where you should open the trade, or this is the point where you should open the trade. Doesn't matter if it ends in the loss. See, losing 10 pips on a system with clearly defined entry and exit criteria is better than gaining 50 pips or using a system where the guidelines are not clear. Because if you make a mistake, you will not, in the second kind of system where you don't know how to enter or exit, you won't come to know whether it's a problem with the system or is it an issue with the way you're interpreting the system. But if you're using a system where you have lost 10 pips but the entry and exit criteria are very precise, you know that it's not you who's making a mistake, but it's a strategy which is not working for you. So knowing entry and exit clearly defined entry and exit criteria is important. The second important thing is of course the trade management, like where to enter the stop loss, when to exit the the limit order setting, or how to manage the trade when it is in progress, like how to adjust your stop loss, or how, basically you should whether you should open another trade or not if it is running in profit. Such kind of guidelines are very healthy. And the third is, of course, what is the limitation. Once you see these kind of factors in the system you're using, you can be 70% or 80% certain that that system is going to work well for you. If these things are not present in any system, I'm highly doubtful if you can make money using that forex system. So this is what I wanted to cover. Now if you want to find out a system which is meeting all these criteria, basically which gives a clear direction of entry as well as exit points, trade management guidelines, as well as the strategy limitations, you can refer to my course called Forex Success Formula. Let me write it down 1 second. I wasn't planning to make this pitch. 1 second. Okay, so 1 second. Yeah, I know there's not a uh, very impressive kind of way I'm presenting, but just came to my mind when I'm making this video that I can tell you about this. Okay, Forex Success Formula. You can go to this site. It's a forex trading course because it's not just about the system, not just about how a trading system. It covers very much in length about how to enter and exit the trade management aspect, as well as I think given two or three I think bonuses also, and the prices are also very affordable. So you can go ahead and check it out. I mean, I don't want to make it as a sales video. I'm just giving you a recommendation. If you want to get a very good course in doing a in which includes a system which is highly profitable and you can make money consistently using it, you can check this out, forexsuccessformula.com. But nevertheless, even if you don't plan to use it, I really recommend that you use a system which has all these three guidelines: a clear defined entry and exit criteria, a very good information on trade management, and the third being the strategy limitations. So use it and see if the system you're using meets that. And feel free to give me your comments as well as your feedback and what kind of more videos you would like to see. I'll try to make them more. Thanks for watching this video. Thank you.